Hello folks, I'm L.A. Little and this is today's NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Well, what does that mean? That means we look at volume, price, and time. We read the tape. We look for supply and demand as we see it on the charts. And we do that each day asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week. I do it Monday through Thursday. Broadcast at or before 10 o'clock Eastern Time. Is archived on YouTube, available to you there. Subscribe. Anytime we push content, you will be notified. As far as these markets, a big down day in the NASDAQ, in particular in the NDX. That was all about Microsoft, the big caps in general, getting smoked. 2.5%, 110 points. 41.80 or 41.65 was the close. Russell only down 0.5%. The Russell keeps holding up better than we see everywhere else, and that's a good thing. But you know, when you get this kind of damage everywhere else, makes it kind of hard to feel good about anything. Gold up 14 bucks. We had the bonds up again, right? Not that much. They got up, they fell back down. But gold and silver had a nice day. We had a nice bounce out of the oils. I don't know how long that will last. But you know, all is set to do a big spike at some point. And we had the dollar down about 1%. So all in all, you know, not a good day for the markets. It was definitely a sell day on these indexes. And if we take a look at the indexes, it didn't do anything to change anything though, right? It's pretty much the same picture that we've seen for a while, pretty much across the board. And that is that, you know, we have been talking about and continue to monitor this kind of a range trade that's taking place here. And as you can see, you go right up to the top of it, you can't get over it, you fall back down, you come down to the bottom of it, you can't get under it, you kind of climb back up. Volume extremely low today. A lot of that had to do with the storm up in the northeast, but essentially you've got a sideways range still building out in the S&P 500. I wanted to point out something, you know, and I don't do the classical stuff that much, but you know, but these little, you know, pennant type formations here after a move up, typically they tend to break with the direction of the trend. So if you're looking at it on a weekly basis, you know, the S&P 500 is still trying to make a move to the top side. If we look elsewhere, looking at the NASDAQ composite, same sort of thing. 2 ranges here. Draw these in. You kind of got this top half of the range and this bottom half of the range, and it went back into the bottom. A little bit more volume, not a particularly good day on the NASDAQ, but it's still just a large range. And there you have the same sort of pennant situation on the weekly. The NDX is where the trouble was today, and had a big spike down on price but no volume, right? You come down, you get down into the lower range, you come into these highs of the lows, and I'm talking about these bars here. You know, you get into this high of the low, that high of the low, right? These two, and what does it do? It comes right to them, holds right there. Even with the horribly, you know, sell-off, a horrible sell-off, 2.5%, you still hanging right at like the lower third, you know, because here you can draw the same sort of, let me grab the right tool. You can draw the same sort of ranges, you know, with an upper range, a middle range, and a lower range. And so far, you're right here in, you know, in this range trying to break down. After the bell, you had a big move up in Apple. That's gonna, you know, give the tape some I wouldn't call it pleasure, but it's going to give the tape some relief come tomorrow, with Apple moving back up to the upside. Apple closed, I think it was down about 109. Let's see where the Apple closed at. 109, yeah, right at 109. And then after the bell, it was trading up here at 114, 115. So it's going to attack this swing point high. And it's fairly clear here that Apple wants to try to get into the top of this bar. You kind of got this top range. Actually, it would probably be better if you drew them this way. There's kind of three ranges here. There's really kind of that one, another one in this area, probably about there, and then you had another one at the bottom. And it was trading right back to try to break into here, but after the bell with the big earnings, I mean, they just blow the earnings away. That's going to take it right back up here, and I suspect Apple's going to make a run for that 119. Now, that's going to change a number of the chip stocks that are suppliers. It's going to help the chips. We saw Intel get hammered off the Microsoft, and we'll look at Microsoft in a second. That volume today came in at 58. You were attacking about 61, so it gets under it, can't break it, right? What's it going to do? It's going to come right back up here. It's going to try to do a retest regen, a bearish one, off this prior swing point low it broke. Given the way this traded today, it probably will get right up to the top of that and try to trade into it before it trades back down, if in fact it's going to. So two ranges here, a lot of chop, folks. People getting chopped up all over the place. Look at Microsoft. This thing was down over 10% today. Let's see where it closed, 9.25 lower. Just demolished. And this was a huge drag. Microsoft's second largest stock on the NDX 100. 239 did 208. So it actually held. I didn't see that today, but it held. It held that range. It looks like it is going to hold that range, right? Because you don't have the volume to break it down yet. So that probably is going to bounce back up into this upper half of the lower range. These, if these are tops, they're just slowly building out, right? And that's the way tops usually work. But the NDX definitely hammered today, but yet all of this still in the context of a big range trade on the dailies and on the weeklies. If I look at the Russell coming up yesterday, gets over the swing point high, falls back under today, but this thing was strong all day long, and the Russell looks like it is going to try to lead and get back up to the highs. If I pull over the weekly on this, the Russell has been in a trading range for over a year. So if you pull this back, you can go back to about September of last year. We don't quite go back that much on these charts. And it's been a range trade that whole time. And that range has been this area. And where's it at? It's in the top, the middle section of the top of the range. Two swing point highs up there. It had broken one of them already, I believe. I don't think it got past the other one. We could, zero in on it. But as it comes back up, this is going to be a swing point high more than likely by the time you get there. The Russell could potentially signal the breakout to be upside on a weekly basis if this market holds and works higher. Indexes, they're really not telling us anything different than we already knew, and that is that we're still in a range trade. We're still not out of the woods on the upside or the downside. So if you're betting big on either side of that, you really have not that much to support a big bet, because it's just up and down. If you look over at these sectors, and I was glancing through these earlier, IBB gets over the top, back under it. Amgen came out after the bell, really traded flat, had volume. The thing's going to continue to try to push. We were looking at the housing sector. That one's probably going to bounce a little bit more. But as you run down through these, what strikes me, there's the transports, the SOX, right? If you run down through these, most of these did not see much volume pickup and did not sell off that much. The XLE was actually trying to push higher. Here's the XLF, right? Just fading back. Now they are doing, in this case, for example, in the XLF, this did come up, tried to test into the top of that bearish retest regen, And what is it doing? It's regenerating lower, or at least trying to. But now, as it comes back, right, there's really no volume as it's coming back into what is a very strong support zone right here. And so it comes right to that price point and it flips right around, right? And this thing's going to try to come back up here and test again. All of these sectors, you know, every one of them I looked at do not look that bearish, even after this kind of a sell-off on the day. Tomorrow you got the Fed. The Fed, of course, nobody's expecting them to say anything other than what they have said, and that is that they are going to raise rates. But you know, if I take a glance at these currencies, you know, it looks to me like people started hedging their bets today. FXY, you know, the FXE, you know, these things are popping back up after big downdrafts. If we pull it down, look at the UUP itself, you know, the dollar finally came off today and traded back into this big bar. Dollar is going to try to trade back in this 2470 area. If it gets past that, it can get a larger move down. I suspect at first that's about as much as it can get, and maybe start building out another range up higher like it did back here. But the dollar, I think the majority of that run is probably over. Bonds. If we look at the bonds, bonds traded up over again, back underneath again. Bonds so extended, wanting to come back in some. Silver and gold, they did a nice little spike today, but really nothing there, no volume there. That looks like a failure to try to get back up again. Gold looks a little bit stronger, but gold's coming back into some big bars. This just looks more like consolidation, backing, and filling type stuff. Copper breaks down again underneath the lows. That is an ugly chart, and it's probably going to continue to be ugly for some time. I don't see what's going to stop copper from going down. And as we were talking about, you know, the oil market actually got a little bounce today, a little weak bounce back up into these lows. On the USO, it's 1742, 1727, got up to 1741, kind of got stymied there. Now, if the oil market is actually going to lift, and it will at some point, it's going to have to get back into some of these big bars on the way up. You know, if you get into these two big bars on the way up, there's a good chance you can come right back up into these in the what was it, December time frame. And that's a huge move, folks. I mean, we're talking about 15%. You know, so when these things move, they're going to move big. The continued divergence, XLE trying to move up. OIH did move up. If we look at the, what was it, XPO, I believe it is, or XOP, XXOP, I believe. This is, yeah, gas exploration production. These guys got a nice boost. So, you know, you're seeing divergence where it kind of looks like oil is about ready to allow a big bounce, you know, not so much a big bounce. The divergence here is probably signaling oil is going to get a bounce, is what I was trying to say. So, overseas markets, you finally got some selling after, you know, days of up, but that's just backing and filling. This market to me looks like it's just biding time before it takes and tries to make another move to the upside. That's the way it looks to me. Let's take a look at a couple of questions that were sent in. One of them I addressed last night, but I really evidently didn't do it quite enough justice. I missed one piece of it, and that is Sony. So let's look at Sony right quick. And the question had to do with the monthly chart, and I didn't pull over the monthly, so I kind of missed that question. So if we look at Sony and we look at it on the monthly, it's coming in this huge bar. And so the question that was there was regarding that monthly chart. You know, it's that high volume bar. The top of it is 2338. You know, should we be selling because it's coming into that bar? And as I'd said elsewhere, you know, on the dailies and the weeklies, they're both suggesting that you're going to get more of a push, 2 to 3 bars. Now, as I said before, those bars could be sideways, and with this big bar out here, it may be sideways. But recognize two things here. One is we're almost at the end of the month. And so if you're looking at the calendar, there's only 3 more trading days to get over this bar or to fill underneath it. And that top 23.47, 23.38, right now it's trading at 23.06. If this finds a way to close over this bar, you're going to actually break 2 swing point highs on this move, which is going to be extremely bullish even with that volume bar there. So I wouldn't count out Sony, actually still trying to break higher on this move. So we got a little pullback. Let me look at the daily here. A little pullback today back in. Should you be taking profits here and trying to buy lower? It really depends on how much you want to go, how much you're carrying and what kind of risk you want to take on it. I mean, if you get a bounce up tomorrow, what I was talking about before is you get a pullback and then a move back up. If the move back up fails, then that would be where you take it. And that, that also, without me even looking at this monthly, that also jives with this monthly. In other words, you come back up, you fail up here, then sure, you can take some off, 20, 30%, whatever you want to do. You come back up there, you can't get over it, you come back, and there's no volume on the push up. Today's volume, low volume, pullback, that's the sort of thing you want to see. Let it try to go back up, get over it. If it does fail there, then maybe that's when you take some of your profits and take them off the table. There was another query and question had to do with McDonald's. Let's take a look at McDonald's and see what it's looking like. Now, McDonald's actually has earnings coming out, and let me see, those are set to come out. Well, actually, it looks like they came out. It came out maybe Thursday or Friday last week. So let's take a look at McDonald's and see what that looks like with earnings already out at this point. So, yeah, it probably was this bar. It looks like January 23rd, so last Friday. Okay, volume at the bottom, heading back down there. This is going to try to test the bottom again, it looks like. And it's probably going to hold it if it does. McDonald's is just in a big range, and so many of these stocks are in these ranges. Like here, it's pretty easy to see kind of 3 ranges. You kind of got one here, you got another one there, and you got this one at the bottom now. Underneath here, and when I look at all of these and I look at this high volume bottom, you really would like to see it test that, really have no volume, and then turn this thing back around. If I pull over the monthly, so this has been in consolidation since this big bar, which was August of 2011. That's crazy. That's like 3.5 years now. And I'm just looking, it's coming back into it still with no volume. I think McDonald's, you could probably take a shot at it. Let me see, that top is 91.22. Yeah, I think there's probably better places to put your money, but a test of this low that has no volume probably is going to trade back up to this 94.5, even maybe 97.5. So if you really like this stock, you could trade off of that. I would just definitely have a stop up underneath it. I wouldn't let it go much farther than that. So if I buy it somewhere around, I don't know, 88, so let's say 87, 80 or something, I just put a stop, look at the ATR, put a stop up underneath there off of about 25% of the ATR. And if it gets you a nice big pop back up, well, great. If it doesn't, you're not losing much. It does look like it would probably be a decent bounce candidate. So much of that, every time I talk about these things, though, you have to recognize the general market, the sector have an effect. And so, if you're going to buy something like this, let's say McDonald's, you want the general market to be strong. So you don't want to be buying McDonald's on a test of this if the market's breaking down, for example, right? That kind of throws everything in off kilter, and because rising tides are going to lift all boats, just as a receding tide is going to tank them all. So recognize anytime I'm talking about this is the price point or that's the price point to sell, you really would like to see the general market support whatever that notion is. Okay, so tomorrow's Fed day. Tomorrow is probably expectations are low that anything's going to happen. If the Fed does come out and in any way, shape, or form look to get more, shall we say, dovish, that dollar is going to tank, currency is going to jump, and the equities are probably going to fly off the shelf. That's the test tomorrow. That's where we're going to see if we're going to get a big catalyst this week, up or down. It's probably going to be on the Fed. I'll see you then. We'll see what it does. Have a great one. I'll see you next time. Take care. Good night.